if like ECB is relatively dovish, and the Fed is kind of viewed as dovish yesterday with yen come dropping down, euro yen would be a good trade post.
Nice to hear that from my mentor.
Right? Yeah.
Because I'm checking out euro yen. Let me just shush that. I wanted to do money management. So let me just quickly go through what I've done. So I've gotten zones from daily and hourly, from moving averages and all that. You see, like this is the euro dollar here. I want to do it real quick because I want to be on the 3 minute. You can see they all go, this support and resistance zones go all the way to the hourly, but chosen from the hourly and daily. So here 3 minute. So basically it's my zones, and this is tight today, and there we go. So it's out. We see yen picking up. The reaction is not that big. Euro pound not really working out. Audi working out. Ama nimezoom in sana. And it's picking up. Now it's picking up. So I was waiting for this reaction to just have a clarity of where if I'll enter, I'll put my stops. Cause the trade sahi nagojea, what's this called? Press conference. So I'm just gonna pause this a little bit. Really, I traded FOMC yesterday. It was very strong reaction. Probably the market expected 50. We were given 50. That's why. So I even don't know the release, but should be 50, man. Should be 50. Yeah, I think I'm.
As expected, but you still have to rise significantly, so it's not bearish.
It's not bearish. I don't think it's bearish.
Alright, I would get out of here 41.15, pretty much where we got in earlier.
Nasikia for my mentors, nini bullish.
Good, 89.30. I think that still could be an opportunity if we get back in there.
Yeah, 50 basis points.
And I think it looks fine. Euro yen is still a valid trade, but it's more of a dollar yen trade than anything else. Dollar yen is really pulling down. So we are currently long euro pound, currently short Aussie yen from 91.58, euro pound from 89.30. Based on Pensacola long euro.
Nasikia wase wangu washaingia euro pound, unabambika walikuwa.
And we gave first for euro pound we closed before the announcement for a small scratch loss.
Anyway.
So we'll hang tight.
So actually naona euro audi ndio imereact, na euro audi nadai kubuy, euro yen nadai kusell, euro pound nadai kubuy.
It works.
So
it still just looks like it could work. Like I said earlier,
euro yen really looks good. I don't know if I can enter. Really looks good. So let's see somewhere here. 60 points, basically.
Maybe, but we're already short Aussie yen.
It's gonna take out the 41 handle.
If I remember this SLs here, so I'd want to be somewhere here.
Maybe catch
60.65.
2
Euro
yen.
yen.
Selling down.
We have some questions for us in the
65.
question box if you want to tackle them.
Okay, we'll do some questions, and then Kay, we basically have like half hour of dead time, right? Because the presser doesn't start till.
Euro yen, we're going to take profit. 103.95, looking good in euro yen.
Just want to see this.
See, I don't trade FX at all anymore, and even I know that euro yen was a good short.
The zip sell signal.
Zip sounds like that's right.
You know, that's what we saw this morning.
Yeah, man.
It closed afterwards, but we saw that this morning.
So
on
anyway,
and that's why we went short. We're still short.
my mentors are in the trade.
And, you know,
I still won't trade because that's not what I was expecting. If not, it's okay.
This euro's diving off the, I guess, sort of like it's a Southern News reaction.
Close euro pound. Aussie yen have a big profit.
So if I was to sell, I would probably sell it now.
We made money in long euro. We made money in short euro yen. We made money in short Aussie yen.
I'd sell here with an SL of 60.
Really nice. And euro dollar, this is exactly what I said was going to happen, which is, or exactly what I
Nasikia kuingia hii trade, man.
and I said I could fear would happen, which is that we had the burst of price action in our favor initially, and it's not good enough because euro sold off after dollar sold off after FOMC, pound sold off after BOE, and now euro is selling off after the initial ECB. So, you know, be careful because, you know, these are pretty crazy markets.
Okay. So a few questions in the box, and some questions regarding execution. Those are not anything I can help you with. That's a question you need to direct to the broker, as I said already.
So am I going half this one? I might go half in this one. 0.12, 0.06.
If the price is way above zip, but you got positive funda on your side, do you chase up there, or is it like
that's a good question there.
Do you just stay very disciplined? You only want the break of the zip, not like 50 points or 70 points above the zip line.
No, we will ride the move. Like we rode the move to dollar yen this morning. We rode the move lower. It really depends.
So I'm in at a small price. I've gone half. That's 0.5% risk.
Okay.
I couldn't resist that, unfortunately, but at least I've gone 0.5. I have a leeway of 1.5 extra, and I'll see how I'll manage that when. When
I am done for now, but I do want to say,
when the conference comes.
Live trading session because we want to show you how we make pips in regular market environments as well as hyperactive market environments. As long as you have a strategy, you stick to it, and try to follow your rules as much as possible, then you don't have to be afraid of trading these wild market environments. Many of you are either BK members or have joined us during the search contest, and the search contest is over.
Interesting. Going down, we have no block.
But if you love what we do and you want to continue, get another surge edition, and you can extend your access for 30 days. And you can continue to live trade with us and get access to our indicators.
Yeah,
And
100%.
We have a special discount link for surge edition. Definitely for your. And if you find more, can you pop into the room?
Honestly, I cannot find
just like
exit
me,
line.
I'll put it as BK4X.
So
BK
I'll take half the point 30.
10% off.
Because if I really look at this, we can take this.
We're gonna put that into the email to you guys after. We're gonna put both the webinars into on-demand video, so you guys can watch them on replay, and you'll be able to use it. But absolutely, if you haven't taken the surge eval, please do so, because I think it's the least expensive way to expose yourself to BK, which is free. You basically get all of our indicators and our live trading strategies and everything that we do for the next 30 days.
I'm gonna go half on this one.
Very nice. What we're gonna do now,
50
after
pips,
just
so
taking a little bit of time off, before we have a little bit of time before Lagarde comes on. So I just finished my ultimate version of the bounce indicator, and I'm going to walk you through at how amazing this indicator is, how well it's
So
actually
pretty
picked
much
up trends
that.
in FX as well as indices this morning.
Yeah, so I'm gonna exit half of the position, had double position, was risk going in 0.12.
The screen K, okay?
We're gonna see how this is gonna flow.
Yep.
In the meantime, I'm
Okay,
gonna be
so I'm gonna
looking
make you the
at,
presenter.
or the other TP should be at 50.
And we
This
are
one,
going to
basically this point.
upload a little presentation
Oh
for you guys just a
no,
second.
it's plus 50,
Um,
100 pips.
let's make sure you guys see this and see if you guys see it in full format. Okay, good. Everybody's seeing it in full format. It's not long. It's only going to take 5-10 minutes, and then I'm actually going to show you the indicator and to show you exactly what's coming up in the month of February in BK. That's going to give you an unbelievable edge, in my opinion, as far as trading goes.
I've gone for
In
2
addition
to
of course, you know,
1, but
the permanent edge
my
also.
exit is 1
So,
into 1,
bounce,
and
as an
half
indicator,
the
is a
position, another
proprietary
half
indicator
position
that
here.
I've been developing here for years at BK.
I'm thinking
but
of this
the
thing here.
evolution of it is that we've been able to repurpose it both for trends and
Yeah,
reversal.
whatever
We
it
actually
will
made-
happen,
we
I'm
actually
locking
made,
the
bounce
profits. And I
indicator
was thinking of
now
coming to
able
50,
trade
because that's
both
the
trend
next
and
level
reversal
if we
depending
break
on
this
what kind of
area.
conditions you have and what are the lead sets, and it's going to show you.
Actually, the best place to have traded would have been
depending
somewhere
on what you
here
want to put the
down.
indicator in. That's sort of very,
But
very cool.
anyway,
But the single
we'll see.
most important thing about bounce, and I think it distinguishes from every single trading strategy ever that you see.
Now, really thinking, do I go half of the position?
Risk and money management tools, which are very unique and very different from any of the tools that anybody else trades with.
No, I'll go for 2 is to 3. I'll go for 2 is to 3. Muko very discreet in my trading. Sikuanga in a specific way, but at least musema risk to reward ratio ya kabla utoke kwa at least 2 is to 3. Anyway, it doesn't really mean you can do that. Always try to be safe as possible. Take early pips as early as possible so as to have many winners. I'm a person who have a psychological effect about winning and losing, which weighs heavy on me. So yeah, let me just do that. 50 times 2 divide by 3, so 33 pips. So I'll go break even there. What's the time? We still have like 15 minutes to the announcement. We'll see. Also, maybe I just let me take this level of 25. 145.71, 145.71, 145.71, 145.71. So bado nimeconsider hii half place, but my whole idea ni ikifika press conference kasija secure hii trade, I'll secure it wherever it is. Yeah, so at least we have a winner. So yeah, let's look at how the other charts are going in. Euro AUD, I was expecting something on the 1 hour. It's pretty much gone now. If anything, it's pretty bad, you know. It's really not for the buy. So for the buy, I'm gonna look at Euro Pound. Let's just look at the 1 hour. Okay, and Euro USD, the 1 hour. Okay, so okay. So I'm looking for a buy here on these charts. Really, I'm less interested in Euro AUD. Reason being, this moving average is the 100 moving average. I basically use it for long-term trend analysis. The market right now is below the average long-term price of, yeah, in my assumption for the past 100 hours. So pretty much, I was expecting the price to hold here. That would have been really good for the buy, but that's not working. Um, so let me just see the buy here. The risk management plan. So on a buy, right? Probably gonna buy somewhere around this area. SL, I think 58 would be fine. 58 would be fine. We can just squeeze it to. Yeah, let's just squeeze it to 50. So euro pound 50. The euro yen deal is going fine. Da 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 da. So euro pound 50 pips. I want to price in that. Calculate that 0.19. It's not 0.10. So I'm gonna come here 0.10. Man, market just touched this place. I don't know. You see, that's why you need to be risk averse. I was greedy. It might be really bad for me if the market just goes off this place, really. But hey, who knows? Who knows? Who knows? So I want to check out Euro USD, where I'll put my money management. So I'll probably buy somewhere here. Wow, that's a huge thing. So I'm not go half of it. 43 points. Yeah, 43 points. That seems some. Or we can put in some space. 45. Let's take 45. 45. And the exit 45. Yeah, so we'll see how that goes. So 45. Euro dollar. 45. Calculate. It's 0.21, so it's the same. 0.1. 0.1. So now that I got all, I'm pretty much less interested in this right now. So I think I'm just gonna close it out. Actually, I was planning to buy this, but looking at this price action, really, if the candle closes somewhere around there, then I'd say it's good for a sell. So let's consider that. Let's consider that. But I mean, I don't trust technically strength, relative strength wise. How is weak. So let's leave it to the end. That one. So shit, I'm not getting my TP. So 10 minutes into the news, I can pause this because there's nothing much I'm gonna do right now. The market is picking up. Anyway, tutaona hiyo part ingine ikikam. I don't like this session, like the FOMC. I really enjoyed FOMC price action. So I have 9 minutes to the announcement. Really naona hii retracement ikikam jo. CJ, I think I'm gonna close this out because anyway sikuwa ni trade. I wish I took 25. I didn't.
Have I tested the bound strategy and experts using the same money management rules mentioned here? Yes, ma'am. Not only have I tested it, I'm actually literally trading my own account using those. I'm just banking money left and right in my own account. Trading dollar yen, euro yen, purely on bounce trend. I just do one trade cycle, meaning I put on one trade at the beginning of Asia.
What do you think?
Usually it takes me one, maximum two.
Cut it
Sometimes I
out.
have to go to 3 trades to resolve the trade, and both of them resolve, easy peasy. I'll show you the trades last night that I put on that resolved very, very quickly. I could do a lot more. I just don't have time. I just don't have time because I'm super busy. But it's the easiest money I've made in a long, long time has been trading balance trend in the yen pairs in Asian session.
Mi wacha nipate sometime naweza toka na loss hapo.
So yeah,
but checking.
Yes. Okay. So 6 trades in a low. Presume all 6 must be in the same direction. So when it comes to bounce, Alan, that's correct. When it comes to trend, we actually change direction if to change. So in other words, watch this right here. We are, what we got, about 8:38?
We'll feel bad I didn't get something out of this.
After she starts talking, we'll come back, we'll revisit the US 30 chart. And what will happen here is, right now you see, we're in trend mode right over here. Bounce indicators in trend mode. You got stopped on this short.
Fuck it.
Will actually convert itself to a
Let's wait for FOMC. Yeah, I really wish I exited there. Yeah, But
in reversal
anyway,
mode, we just keep buying until it resolves.
I go down.
Yes,
I
exactly.
don't
That's
know.
the choice of your end. Okay.
I ain't interested in losing.
That's how it is. So the very, very cool thing before we go to the presser and see what she has to say is the thing that we put into this indicator. This is the reason why all of you who are not part of BK really should need to come trade with me this month. This will be literally the best month ever in BK because this indicator now is both trend and watch how cool this is. I go into the settings box and I can change it to reversal. And if I do the reversal, I say okay. First of all, you see it goes into reversal mode, and it actually can trade reversal signals. So if I traded it in reversal mode this morning, it would have made me 40 points right off the bottom, right? So you could even have two charts, one giving you signals in trend mode, the other one giving you signals in reversal mode.
Manze, this is the hard part of trading, especially ukiwa kama mimi freestyle.
So cool to be able
Really, I should have taken it there. I didn't. Yeah. Maybe I should have considered. Blah blah blah. I should have considered, but I'm seeing the dollar has been strong, so I was just look at Euro, whoa, look at that pullback. Makes me interested to come back to Euro because Euro is weak. I mean Audi is weak. Let's check this out. I can't believe the market's going down again. Anyway, I really wish, but anyway, we have 5 minutes. I had a position, man, I lost it. So anyway, we'll concentrate on the bigger picture, the Z-main trade. So still, as I look at it, the euro is kind of selling, but we see the Audi is really weak. Yeah, pretty much that so far. So we're still looking at two scenarios where if after the conference, things don't go well for the euro, we're gonna sell euro yen, right? If it goes well, I mean, I was looking at euro pound and USD, but I mean, look. I'm sure if you count 3 minutes, you will see what I'm talking about. Look at the retracement. I mean, it came hard, but look at the retracement. Alright.
What do you want to see? NQ or ES? So here's the NQ. This is NASDAQ, right?
Here we can't see any retracement, although also the dollar we can see out of the move the retracement also is actually better, but relative strength wise, dollar is strong, pound is weak, but I mean right now we're not seeing that. You see, we're not seeing that. Let's look at excuse me, let's look at US 10Y, just to know the dollar situation.
But very, really cool. You can go both ways, right? Who's asking me? Danubi is asking me this. Okay, so we gotta get. I gotta focus on Lagarde. So give me a second. Let me see if I can stream her. God knows if this technology is going to work, but give me a second. Hang on. Let's do. Okay.
It's 10Y go under.
We can see her stream.
So pressure bado iko kwa dollar. XY iko positive. Any daily.
Let's hope this comes in.
monetary policy. This is seen as slightly less hawkish than their previous statement, which suggested that they could see as many as 3 more 50 basis point hikes.
So that
could explain why euro.
So press conference imeanza. Look at the retracement on Audi. Really nice.
Hi, can you hear me?
Yeah, I heard you.
That what I was saying earlier wasn't coming through. So what's interesting is that in the press release it said that the governing council intends to raise interest rates by another 50 basis points at their next meeting in March. So they're already pre-committing to 50 in March. But then it also says, and it will then evaluate the subsequent path of its monetary policy, which suggests that with the other central banks, after March, they could take a break, take a pause, and that is less hawkish than last time when ECB Lagarde suggested that you could see 3 more 50 basis point hikes. So that could explain why euro is struggling a little bit here. And so we'll be listening to listening to our professor to see if that is the message she wants to leave us with.
Okay, sounds good. So I'm gonna try and do the presser now, guys. Okay, let's see if we can do this.
So conference inaanza na tunaona euro imeanza kupick up. Just a little money management here. So if we cover this, I think anywhere here would be okay. We'll definitely take the low as so 46 pips. 46 pips is fair. Let's just put this in again. Got anxious guessing. Can take off 48. 48. So 48 points. 48. Let's come here.
I'll call them out. But I really want to take Ken did a lot of the trading already with you. I really think to showcase the Alice indicator with you guys, because I think it's going to be really the future of our live trading going forward. So it should be really, really cool.
Yeah, I don't want to distract everyone, so I'm going to leave the trades to Boris.
Okay.
Good afternoon, and welcome to the ECB press conference.
We have I'm not trading any of the indices today because we're sort of focusing on FX, but there's obviously lots of good trades in the indices. And here, we'll have plenty of time. Those of you who are going to join the
we are in a hybrid format again,
search
so
trader,
I would like to ask our colleagues, the journalists who are joining via WebEx,
I'm not in
to
any
turn on
rush
the cameras
to
and
do
the
trades
microphones when they ask
right now.
questions.
But you can see those of you who are looking at trades, you can see that those are really, really good
Thank you
trades.
very much, Wolfgang, and good afternoon to all of you. Good morning for those who are overseas. The Vice President and I welcome you all to the press conference, and we would like to begin this press conference by congratulating Croatia on joining the euro area on January 1st, 2023. We also warmly welcome Boris Vucic, the governor of Banska Narodna Banka, the National Central Bank of Croatia. We will now report on the outcome of today's meeting. The Governing Council will stay the course in raising interest rates significantly at a steady pace and in keeping them at levels that are sufficiently restrictive to ensure a timely return of inflation to our 2% medium-term target. Accordingly, the Governing Council today decided to raise the three key ECB interest rates by 50 basis points, and we expect to raise them further.
Fuck.
In view of the underlying inflation pressures, we intend to raise interest rates by another 50 basis points
Whoa.
at our next monetary policy meeting in March, and we will then evaluate the subsequent part of our monetary policy.
I think that's positive. I'm not sure.
Effective levels will over time reduce inflation by dampening demand, and will also guard against the risk of a persistent upward shift in inflation expectations. In any event, our future policy rate decisions will continue to be data dependent and follow meeting by meetings approach. The Governing Council today also decided on the modalities for reducing the Eurosystem's holdings of securities under the Asset Purchase Programme. As communicated in December, the Asset Purchase Programme portfolio will decline by 15 billion euros per month on average from the beginning of March until the end
So
of June.
quantitativism,
And the subsequent pace of portfolio reduction will be determined over time.
So what's happening here is the market's trying to digest.
Broadly in line with current practices. In particular, the remaining reinvestment amounts will be allocated proportionally to the share of redemptions across each constituent program of the APP and under the public sector purchase program to the share of redemptions of each jurisdiction and across national and supranational issues. For our corporate bond purchases, the remaining reinvestments will be tilted more strongly towards issuers with a better climate performance. Without prejudice to our price stability objective, this approach will support the gradual decarbonization of the Eurosystem's corporate bond holdings in line with the goals of the Paris Agreement. The decisions taken today are set out in a press release available on our website. The detailed modalities for reducing the APP holdings are described in a separate press release which will be published at 3:45 local time. I will now outline in more details how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions.
So nimecheki market respond on the down. This is now my trade.
According to Eurostat's preliminary flash estimate, the euro area economy grew by 0.1% in the fourth quarter of 2022. While above the December Eurosystem staff projections, this outcome means that economic activity has slowed markedly.
Yeah, so ni kama jana, but wacha tuone.
Subdued global activity and high geopolitical uncertainty, especially owing to Russia's unjustified war against Ukraine and its people, continue to act as headwinds to euro area growth. Together with high inflation and tighter financing conditions, these headwinds dampen spending and production, especially in the manufacturing sector. However, supply bottlenecks are gradually easing. The
So
supply
we
of
can
gas
see
and
kwa market zote zilienda chini, but unachiki yen ni the strongest kwa hizi zote. That's why I want to short euro against yen. Nimeacha kusikiza speech hata. So
supported by continuing reopening effects
let's focus on this.
for leisure activities. Rising wages and the recent decline in energy price inflation are also set to ease the loss of purchasing power that many people have experienced owing to high inflation. This in turn will support consumption. Overall, the economy has proved more resilient than expected and should recover over the coming quarters.
So sijui kama Nyoku is quantitative easy, may disappoint market. Anyway, the point ni mujua, the market has been disappointed. Yes, so far.
However, the rate at which jobs are being created may slow and unemployment could rise over the coming quarters. Government support measures to shield the economy from the impact of high energy prices should be temporary, targeted, and tailored to preserving incentives to consume less energy. In particular, as the energy crisis becomes less acute, it is important to now start rolling these measures back promptly in line with the fall in energy prices and in a concerted manner. Any such measures falling short of these principles are likely to drive up medium-term inflationary pressures, which would call for a stronger monetary policy response. Moreover, in line with the EU's economic governance framework, fiscal policies should be oriented towards making our economy more productive and gradually bringing down high public debt. Policies to enhance the euro area's supply capacity, especially in the energy sector, can help reduce price pressures in the medium term. To that end, governments should swiftly implement their investment
Pressure
and
still
structural
on.
plans
Funny
under the
thing,
next
it's
generation.
actually harsh on other places than the
Reform of the
Euro
EU's
yen.
economic governance framework should be
Euro USD is really taking it in.
Turning now to inflation. According to preliminary
Wow.
Eurostat's flash
Though it is the thing though,
which
I'm trading a trend man.
Eurostat
Nah,
for Germany
hii
inflation
ndo
was
ilikuwa on trend
8.5% in
on
January.
the sell side.
This
Tukiangalia
0.7 percentage
Tunaona
point lower than the
shit.
December figure, with the decline owing mainly to a renewed sharp
ati
energy
imefika kwa
prices.
tipika nini.
Market-based indicators suggest that
Oh
energy
come
prices
on man,
over the
you're
coming
not
years
serious. You can't just
will
reach here and
significantly
start
lower
bouncing
than
back.
expected at the time of our last meeting. Food price inflation edged higher to 14.1% as the past surge in the cost of energy and of other inputs for food production is still feeding through to consumer prices. Price pressures remain strong, partly because high energy costs are spreading throughout the economy. Inflation, excluding energy and food, remained at 5.2% in January, with inflation from non-energy industrial
Let's
goods
see how the
rising
other markets are
to
really operating.
6.9%,
Trades make
and
my
services
stomach feel
inflation
bad.
rising to 4.2%. Other indicators of underlying inflation are also still high. Government measures to compensate households for high energy prices will dampen inflation in 23, but are expected to raise inflation once they expire. At the same time, the scale of some of these measures depends on the evolution of energy prices and the expected contribution.
Fuck! I'ma close this man
Uncertain.
and leave one
Though
portion
supply
in.
bottlenecks are gradually easing, their delayed effects are still pushing up goods price inflation. The same holds true for the lifting of pandemic-related restrictions. While weakening, the effect of pent-up demands is still driving up prices,
Itaenda
especially
juu.
in the services sector.
Ukiona candlestick ya 1 minute nashindwa kubreak
Wages
hapo,
are growing
as I
faster,
told you.
supported by robust markets.
Shit, manze
Some
inaniboo.
catch-up to high inflation becoming the main theme in wage negotiations. At the same time, recent data on wage dynamics have been in line with the December Eurosystem staff projections.
It's interesting ukiangalia on the daily. That's why I should cut half a position, man.
At around 2%, but these warrant continued monitoring. Turning to our risk assessment, the risks to the outlook for economic growth have become more balanced. Russia's unjustified war against Ukraine and its people continues to be a significant downside risk to the economy and could again push up the costs of energy and food. There could also be an additional drag on euro area growth if
Finally,
the economy
finally.
weakened more sharply than we expected.
Finally, so we can come break
Moreover, the
even.
recovery would face obstacles if the pandemic were to re-intensify and cause renewed supply disruptions. However, the energy shock could fade away faster than anticipated, and euro area companies could adapt more quickly to the challenging international environment. This would support higher growth than currently expected.
Another 15-20 minutes.
The risks to the inflation outlook have also become more balanced, especially in the near term. On the upside, existing pipeline pressures could still send retail prices higher in the near term. In addition, a stronger than expected economic rebound in China could give a fresh boost to commodity prices and foreign demand.
Naangalia place naweza exit ID.
Domestic factors such as a persistent rise in inflation expectations above our target or higher than anticipated wage rises could drive inflation higher also over the medium term. On the downside, the recent fall in energy prices, if it persists, may slow inflation more rapidly than expected. This downward pressure in the energy component could then also translate into weaker dynamics for underlying inflation. A further weakening of demand would also contribute to lower price pressures than currently anticipated, especially over the medium term. So let's now look at the financial and monetary conditions. As we tighten monetary policy, market interest rates are rising further, and credit to the private sector is becoming more expensive. Bank lending to firms has decelerated sharply over recent months. This partly stems from lower financing needs for inventories, but it also reflects weakening demand for loans to finance business investment in the context of a steep upward move in bank lending rates and a considerable tightening in credit standards, which is also visible in our most recent bank lending survey. Household borrowing has continued to weaken as well, reflecting rising lending rates, tighter credit standards, and a sharp fall in the demand for mortgages. As loan creation decelerates, money growth is also slowing rapidly, with a marked decline in its most liquid components, including overnight deposits, only partially compensated by a shift to term deposits. So summing up, the Governing Council will stay the course in raising interest rates significantly at a steady pace and in keeping them at levels that are sufficiently restrictive to ensure the timely return of inflation to our 2% medium-term target. Accordingly, we today decided to raise the three key ECB interest rates by 50 basis points, and we expect to raise them further. In view of the underlying inflation pressures, we intend to raise interest rates by another 50 basis points at our next monetary policy meeting in March, and we will then evaluate the subsequent path of our monetary policy. Keeping interest rates and restrictive
Taka
levels
kuangalia if I
will
can
over time reduce
write
inflation
this thing
by dampening
much
demand,
longer.
and will also
I
guard
just-
against the risk of persistent upward shift in inflation expectations.
Want you to become, a full UK
Moreover, from the beginning of March 2023,
Yes. And for those of
AP
you who are
real
really serious
portfolio
about
will
trading
decline
this
at a measured and predictable pace, as the euro system will not reinvest all of the principal payments from maturing securities. Our future policy rate decisions will continue to be data dependent and determined meeting by meeting. We stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term target. And we are now ready to take your questions.
Thank you, President Lagarde. And the first question for Jana Rando of Bloomberg News. Jana, please.
Jana Rando with Bloomberg. Good afternoon.
Good afternoon.
I was wondering if you could give us a little bit or can you tell us a little bit about the flavor of the debate that preceded today's decision to raise interest rates by 50 basis points in March? I'm interested in knowing whether there were any calls to commit for longer, potentially flag a less aggressive stance, or say nothing at all, given that you also say that your decisions are data dependent. That will be my first question. And the second one, I'm interested when you say the subsequent policy path will be decided in March. Are we just talking about the pace of rate increases, or could one potential conclusion also be that you have already reached the peak in interest rates at that time? Thank you.
Yes,
Thank you very much. Those are really good questions to try to explain our decision. And I would just remind you that our decision is not the decision for March. We're taking a decision as of now, which is to raise all three interest rates by 50 basis points. I would characterize our good discussions with an enlarged governing council, given that we are now 26 around the table. I would characterize them as marked by the sign of continuity and consistency. And I know that I have
Venye nasikia kibonga naona fuck anaweza nini sahi
but the expression "we shall stay the course" of the
inaweza
governing
make
council
market
will stay the
bounce,
course
but yetu ni
is a
idea
good way
yangu.
to express that double principle of continuity and consistency. Continuity because we were very clear in December that in all reasonable scenarios, significant rate increases would be needed. Would be needed for what?
Venye nabonga
To bring inflation back to the 2% medium-term
but we see the
objective that
market
we have
going
in a
down, so
timely
I
manner.
must still hold the position.
And we also made it clear that this would require rates to rise to sufficiently restrictive
Anything I wouldn't
levels,
inaanguka
and
be
that
sexy.
rate increases
But yeah,
would
remember I
happen
had a scenario here. I've just
So
remembered.
we
Where tulikuwa tunaangalia the long term, and we see we've crossed the long term, so we would have made a good trade, you know.
in that continuity that I have tried to explain. Steady state,
So nime exit some nini. By the way, I never really worked on this part because of I was seeing the pullback. Yeah, but anyway, I took my trade there. Let's see how this would
which is a
have
strong
worked.
word. It's not an absolute, irrevocable, and
So,
conditional
yeah.
commitment, but it's a strong
Anyway,
word.
who knows what
We
else.
intend to raise by
So,
50 basis points, and that is what
back to
was meant in
here.
December by this steady state reference that you find yet again in the monetary policy statement. So this has been
Marketing
the
bouncy
continuity.
apple.
Where we have consistency is consistency with the communication that we had back in December and with any communication that I have expressed ever since.
So
And it's,
that's pretty much it. The rest I'm gonna
consistency
save.
with the view that we reached
Just wanna do
in a
some
very, very
analysis
large
here again on
consensus
the daily.
today that it should be 50 this time around. It should be it is intended to be 50 in March. Now you will say, well, yes, but what about about after March? Does that mean that you have reached the pinnacle or the peak?
Hey, kitu anasema inaweza influence.
No. We know that we have ground to cover.
Oof.
We know that we are not done.
That will make the euro
What
go
we're
up.
saying is that
If I'm not
as
wrong,
we
I'm
will
not good at this thing, but that
projections,
news.
we will need to assess what rates,
So,
level,
and
and
I'm pretty much done for
pace it will be
easy
needed
day.
in order to do the two things
I'm
which in
gonna
my
trail
view are
this until
embedded
my
in my expression,
TP
stay the
some
course.
pips
The
away
first one
from.
is to raise significantly
So,
to restrict
FOMC definitely more market moving,
stay there
but anyway, we still did make
so that we
some
are
pips.
confident that at
Yeah.
those rates we will actually deliver the 2%
And it
objective.
worked. Still wasn't that bad. You know, I'm that type of very erratic person, excited.
Those were the themes that we debated.
Yeah, so I was looking for that. So we had
On the fact that
in 9 minutes we were able to secure a trade. 18 minutes later we were like got some more profits, but we want to see if we can ride it all the way to there while trailing with this moving average. So that was a session. Yeah, I'ma post this. Whoa, it's fucking hour. So yeah, I wish I could promote this on YouTube because it's good stuff. Just a summary of how things go here. So the whole idea is
Second question goes to Balazs Korani.
rate decisions. What did I do? So I came up with a couple of charts. I had Euro, USD, Euro Pound. Man, I'm feeling the way Euro AUD is going down. I should have been there. Anyway, I had a very different perspective which changed here. As I said, I used the long-term 100 MA for long-term trend, and we see we just crossed that, so we go into the short term. You really want to take those turns when they're fresh. So yeah, so I was to buy Euro USD, Euro Pound, and Euro AUD. Big reason is there's negative things along this. If you look at the week, AUD and Pound pretty performing badly. Yen is strong, so I wanted to short Euro Yen and buy Euro on Euro USD, Euro AUD, Euro Pound. So the thing is, especially I've seen with FOMC and the ECB, is there's two parts about rate announcement. There is the announcement and then there is the press conference. So the announcement can be a shocker, which will be market moving, or as expected, which is still always market moving. But what I've learned is to wait for the conference to have a very clear view of. Actually, don't try to judge what these guys do. Just look at the market. So, is it dovish, hawkish reaction in the end when it comes to the press conference? And we totally see that it's been dovish. Same like dollar. Anyway, so that's that. And yeah, so always have a two-sided way, and whichever way is taken, go with it. And yeah, based on relative strength and economic underlying things. Yeah, so that's pretty much for it today. I'm gonna chill out and have a good day.